Okay, you know what? We're going to go ahead and get started. Thank you so much for joining us. My name is Jennifer Young, and I'm with University Credit Union. And today we're going to be discussing construction loans. Just a few housekeeping items. If you do have questions, I'd encourage you to type those questions in throughout the presentation so that we can address. We'll stop periodically to address those questions, and hopefully we'll be able to answer all of the questions that you have. If not, I'm going to just point out. You can see on your screen the mortgage department number 801-481-8840. That number will ring directly at the desk of any of our mortgage consultants that can help you through the process, answer any questions that you might have. So again, if you have questions, that 801-481-8840. So that we're covering this information, or so that we're addressing what information we're going to be covering, we're going to cover construction loans. Now, when I talk about a construction loan, I'm talking specifically about when you're looking at building a custom home. There's a lot of misconceptions out there that you would need a construction loan if you were purchasing a home from one of the big builders in town. So Destination or Ivory or those type of big builders. When you go to them and you're building a home that is under construction, you won't need to worry about doing the construction financing. All you have to worry about is when the home is 100% finished, you'll be required to do the long-term financing. So those are not the construction loans that we're referring to. We're referring to when you find a piece of property, and that piece of property is where you want to build your dream home, and you're going to need financing to accommodate that. And that's what kind of a construction loan we're referencing. We're going to talk about a couple of different types of products that we have. We offer a one-time close and a two-time close. And those types of products come with different terms. The one-time close is basically if you're going to be financing under $453,100, that's a Fannie Mae guideline. If you're going to be financing under that amount, we're going to encourage you and show you the options of a one-time close, which is you're going to close one time for the construction period. For the time that it takes to build the home, you'll pay interest only during that time frame. You have some options on that. You can do 6 months, 9 months, or 12 months on those terms. It also gives you the option of locking in your long-term rate up front. That way you don't have to worry about market conditions going up or down. And you also pay one set of closing costs. That way what it does, it just really gives you that option, that benefit of a one-time one-time closing. At the end of the construction loan, you'll be required to sign just a few documents that are modifying the loan from the construction to the long term. And that's when your payments, your regular payments, will kick in. So I'm going to stop for just a second. We have a question. What kind of a loan would I need for remodeling a home that has already been built? So far, a kitchen remodel, maybe an addition. You know what? That is a great idea. That's a great question. You can do a one-time close construction, or you could do a two-time close construction, or you can actually do a home equity line of credit. Wendy, those are good questions, but I will tell you it really depends on the overall expense of the renovation that you're talking about, the remodel that you're talking about. If it's getting into where you're going to be adding square footage and you're going to be in a situation where it's a significant remodel, I would say that a construction loan is going to be beneficial. If it's simply going to be upgrading or updating a specific area of the home, a home equity line or a cash out refinance might accommodate and accomplish what you need. That's a really good question though, and hopefully, again, if it's a really significant remodel, a construction loan might be a better way to go. If it's a smaller, then maybe a home equity line or a second mortgage, something like that, or a cash out refinance if you have enough equity. So that's a really good question. Thank you. Now on the two-time close, the two-time close is really for a bigger project. It's for homes where you're going to be into this over the 453,000, so 600, 700, whatever, in those sizes. The two-time close is an opportunity to close two different times. You're going to close on the construction loan, but you are subject to market conditions on the long-term loan. So the construction loan, we close on that We go through the process, you build the home, and then when the home is 100% complete and we have a certificate of occupancy, that's when you would need to get your long-term financing in place. And we would start that about 30 days before the home is complete. We would start a secondary application. We would go through the process of requalifying, pull updated credit, make sure everything is still the same as when we started, and qualify you on the long-term loan. And it is at whatever current market conditions are. Now, the one thing that I will say, we do give you a credit because we recognize that there are 2 closes. We give you a credit of 0.5% of your loan amount towards your long-term closing costs, so that those closing costs will be almost covered by that 0.5%. Really, at the long-term loan, all you're going to be required to pay again is your title charges, and then setting up your escrow charges and updating the appraisal and credit. The appraisal update, really, we typically would just need a final inspection. The final inspection just saying that, you know, we did it subject originally to completion. The final inspection just says you built it the way that you said you were. And so there's minimal cost at that secondary closing, and we try and help you with that with a 0.5% towards that. Hopefully that gives you an idea on the 2-time close. And we're going to go over specific details through the process so that you understand what you're going to be facing. So just to give you an idea too on our construction loans specifically, the construction interest rate, just to give you an idea, today's rate is at 4.74. So they're low rates during the construction. You only are required during the course of construction to make interest-only payments on the funds as they're drawn. And so at the very first, you're not going to have much in interest payments because we're not going to have to draw a lot at the very first. You might have some deposits that you have to pay to suppliers and just initial deposits. And you might have to pay for some plans and perhaps permits, those types of things. But there isn't going to be a lot advanced at the very first. And so your interest payments at the very first of the loan are going to be smaller. But as it gets towards the end of it, where you've been paying a lot more through the course of construction, interest payments will go up. But it is only interest on the funds. You do have options on the construction loan of 6 months, 9 months, or 12 months in building terms. And we do offer to finance up to 95% of the loan to value or cost, whichever is most limiting. So if you have a cost of $500,000 and you have a value of $525,000, we're going to use the cost as the lower to figure our loan amount. So 95% of loan to value or cost. We do finance up to $2.5 million on construction loans, and we will, the additional to that, or the caveat to that is we will go over $2.5 million, but at that point we typically will go to our commercial department and have our commercial department handle those. And we do only offer construction loans on primary residences or secondary residence. We do not offer construction loans for investment properties. So just to give you a side-by-side comparison, again, the one-time construction loan, you close one time. You have a period that's set aside for construction that you'll pay interest only on, and then you'll sign some modification documents, and you'll finish up the long-term loan once the construction's finished. You'll modify it, and you'll finish up the term, whatever you originally decided on, a 30-year, 15-year. You lock the long-term rate in up front. And so whatever the market is, we would lock in that rate up front, and it would take effect, again, when the construction is done, it would take effect at that point. Your loan amounts are restricted on this one-time close to the county loan limits. So typically Fannie Mae, in Salt Lake County is a little bit higher, but Fannie Mae loan limits are 453.1. So it just gives you an idea. If you're in that category, the one-time close might be a better deal for you versus the 2-time close, where you do actually close on a construction loan and then the long-term loan. That lock-in on the long-term rate isn't done until the home is complete. So you would be subject to market conditions on the long-term rate. The loan amounts can go up to the 2.5 million and higher. If we do go over that, we would involve our commercial department. So just kind of a side-by-side comparison of the 1 and the 2-time close. So we really want you to understand what you're going to expect with the construction process. And so on the construction process, Sorry about the phone in the background. Like I said, technical difficulties. We want you to understand what you can anticipate through the process. So the number one thing, first off, that we're going to start is we really want to have a general contractor involved. In fact, I will go as far to say I don't just want, we require a general contractor involved. If you have experience in the industry and you want to do it as an owner builder, talk to us and let us look at what your justification is behind that. If you've been a general contractor and you're looking at building your own personal residence, we would love to have a conversation about that. And if you can justify to us why you want to do it as an owner builder, that you've been in the industry for a long time and you have the experience, the biggest thing that we want to accomplish with this experience, this construction loan, is we want you to have a good experience and we want us to have a good experience. And we have found that it's just better if we do have a general contractor involved so that you can avoid some of those unforeseen pitfalls that come up through course of construction. So we do require a general contractor to be involved. We have another question that I'm going to stop for just a minute and ask, what are the limits in Summit County? Summit is actually the 600,100. And I'm going to say that just as soon as I say it, I'm going to question myself, but I'm pretty sure that they're same as Salt Lake. So 600,100. So if you're over that 600,000, you would need to do a 2-time. If you're under that, then you would need to do, your option is available to do a 1 or a 2-time. So thank you, Mike. That was a really good question. The second thing that you need to know after a general contractor is that we are going to gather information from you and from your builder. We're going to require that your builder provide us with specific information as well as you. So we're going to ask you for all of the standard stuff. We're going to ask you for W-2s and pay stubs and tax returns, and we're going to have you make sure that you provide us with a cost breakdown and a set of plans and show us what the permits are going to be. If you've submitted your plans to the city where you're building, and making sure that they've approved your plans and that you've gotten an idea of how much your permits are going to cost. That's a big part of the process because permits can be a big surprise to most people. Most people go in thinking that they're going to be a couple of $1,000s, and we've seen permits that are upwards of $15,000 to $18,000 for permits. So we really want you to do that beforehand so that you're prepared for that. We're also going to ask the builder for additional information. We're going to ask them for a copy of their insurance, if they provide workman's compensation, if they have, if they're in good standing with the state construction registry. You're going to hear me talk about that a lot. The SCR, State Construction Registry, that plays a big part of construction loans, and you need to know that those are things that we're going to look into to help make sure that this experience, again, is a positive, good experience for you. We're going to ask the builder to provide us a copy, a credit authorization signed, so that we can pull credit and make sure that they're in good standing. Not only are they strong financially and that they're running a good business, but they're also personally credit-wise. We want to make sure that we're protecting your interest. And we take this obligation very seriously when we do construction. And so we're going to search that and make sure that the builder's in good standing with his business. We're also going to ask that if they don't do workman's comp, that they have a backup plan, that they have some kind of insurance or something that protects the people that come on the job site. There are just a lot of things that we do, and we want you to be prepared for that up front, knowing that we're going to underwrite your builder the same way that we underwrite you, and making sure that this is that you're protected through this process. The next step is, once we get all of that information together, we're going to put together a preliminary loan approval, just so that you know that everything looks good and that we have approved. Now, there's a part of this statement, preliminary loan approval. We do a preliminary loan approval. This isn't a qualification. We approve you, and we say to you, we've reviewed all of this information and we are approving you for this much, and we give a dollar amount. That says that's our stamp of approval, is committing to you. You've committed to us and provided us information. We're providing you with that approval. So there's a difference. A lot of lenders will give you a pre-qualification. We're giving you an approval. We review the documents before we ever issue this so that we're comfortable with our position. At that point, if we are good to go ahead, we'll order appraisal and title. Appraisal, again, I mentioned earlier, appraisal is done subject to completion, and this is why we need a set of plans and specs. and why we need the cost breakdown. We want to make sure when the appraiser appraises this property that he or she is appraising it subject to all of those improvements that you're putting in. And so on the plans and specs, it's going to tell us what kind of finishes you're doing. Are you doing, solid surface finishes? Are you doing, soft surface? Are you doing carpet? Are you doing tile? Are you doing granite? Are you, what are the upgrades that you're doing to this? This is your home and it's unique to you. And we want to make sure that the appraiser knows that. We want to make sure that you're getting full value for what you're offering and putting into the home. Title does a unique search as well. Title not only does the typical stuff, but they're also going to give us some additional endorsements for construction. They're going to do an endorsement that says that once the foundation is in, they're going to do a foundation endorsement to say that this foundation is actually supporting the home that you presented to us. So they're going to search it, they're going to look at it, they're going to measure, they're going to make sure that along the way, as we go throughout this process, that we're getting what we're started out thinking we were going to get, in the end, we're going to actually get. They're going to search with the State Construction Registry to make sure that there are no prelims filed on your property. Prelims can be kind of a scary thing when you're starting construction. If somebody comes out and they start some work on your property, they can file something that's called a pre-lien with the State Construction Registry that says we have a right to money on this project. And those are things that we are careful to check and make sure. And so the title company is going to do an SCR check to make sure everything is clean before they record the deed of trust. And then through the process, they'll double check to make sure that there aren't any liens piling up on the deed, just to make sure that we're safe and that we're still in a first place position and that you don't have any debts that are outstanding that need to be taken care of. So you can see that there's a lot that goes into it. So after we get the appraisal back and we get the title back and we have all of your financials and we have all the builder financials and we have all of this stack of information, then we'll issue a final loan approval. And really at this point, we're going to say to you, congratulations, we have a final approval and we're ready to go ahead and close. Now, before you do anything, and we're going to go to the next screen, the final loan approval is in place. And we're ready to close out the title company. But what I want to make sure and clarify to you is, while we're doing all of this process, it's so hard not to want to go out to the land and start doing something, like start digging dirt and shoveling that dirt and just feeling like you're making progress. And I just cannot emphasize enough how important it is. Do not turn over even a shovel of dirt on that property. Don't touch that dirt until we are recorded and ready to go. The reason for that, especially with lots that are, have different elevations and you're going to need some fill dirt and stuff like that. I've had so many deals where it's stalled the process of the construction loan because work has been performed on the property. If any work is performed on the property prior to the deed of trust being recorded on the construction loan, then they have the right to a pre-lien. They have a right to lien before we get our deed in place. And it messes up the title and it stalls the project. In some cases, it can actually avoid us from doing a construction loan. So I can't emphasize enough, don't start construction on your home until the deed of trust on the construction loan is recorded in the first place and we give you the go-ahead. Now, when you close with the title company, it will be similar to those of you that have closed on a home. It'll be very similar to that. You'll go in and you'll sign a set of documents that outline the terms of the construction loan. It will show the interest rate. It will show the term on it. It will show, the interest-only payments. They're very similar documents to your typical mortgage closing. The only thing that's unique to that is you'll also have your contract with the builder, and you'll have the additional endorsements that are required on the construction. As I mentioned, to the foundation and the SCR endorsement, there's a few just extra things that'll be required, and those are things that you'll see at the title company. Once you sign at the title company actually takes 3 days before they'll record the deed of trust. What they do is they will get it, they'll do one last search on the SCR, they'll go out and inspect the property to make sure everything is good to go, and then they'll record the deed of trust and they'll call us and give us the go ahead. And at that point, that's when you're able to go ahead and start construction. Now, through the course of construction, we handle the disbursement of funds through draws. Now, draws are referred to as, it's a form that we require that lists the name of who it's going to be paid to, the amount, and what category it's going to be pulled from your cost breakdown. I mentioned before a cost breakdown. The cost breakdown goes through and it addresses costs in every single category of that home from the very start, which would be, why do I just go blank when I do this? But when you start at the very first, when your foundation and your lumber and some of your subcontractors, your electrical and plumbing that come in and do all of the sub work, which means the stuff that's going to be in the foundation. So before the foundation's poured, those types of things. All of those things from the very first part of the start of construction to the very end when you're going to have your final things like painters and cabinetry and flooring and even in a lot of cases landscaping and those types of things. All of those people throughout the process are going to need to be paid, and they're paid by the builder submitting draws. So the draws again would say this person, this is what they performed, or this company and this is what they provided, this is how much it is, and this is the category related back to the cost breakdown. And those are all handled by our loan administration department, and they are fantastic to work with. Draws typically are made on a monthly basis. We, at the very first, will typically do 1 or 2 in the first month because we understand that you're going to have to put deposits down with providers. And so we'll provide that information, or we'll provide you the opportunity to do a couple in the first month, but then we set it up typically on a monthly basis. General contractors are accustomed to this. They're used to that. It's part of the industry and it's very customary to handle them that way. But we wanted to make sure that you understand the process as well. So that's how that works. So we get to this point and we're pretending that the home is 100% done. And if you've closed on, the home's 100% done, excuse me, and you have a certificate of occupancy with the city and everything is done, the builder has submitted all the final bills and everything is finished and done and you're ready to convert to the long term. If you've closed on a one-time close, then we'll just have you sign a few documents that convert it over to the long-term loan, and you're off and running for the rest of the 30 years, making your regular monthly payments, and the construction loan is a thing of the past. If you've done a 2-time close, then we've started your application by this point. We've recognized that we've updated all the information. We've gotten a final inspection on the appraisal. We've updated your credit. We've updated income information. And we've made sure that you qualify fine on this long term. Hopefully nothing has changed. Hopefully during the process of the construction loan, you haven't acquired any new debt. That's another really important point. Through the course of construction, don't acquire any new debt. It's really important that you keep things the same as when you first started, especially if things are close on your qualifying ratios. That could determine whether or not you're able to qualify for the long term, and if you're going to be in trouble at the end of this when you've built a home that you can't afford to qualify for. We check in with you periodically, and we'll talk to you periodically through the construction. But when I say that not acquiring any new debt, it's really important. It's very tempting when you're doing this to go to Home Depot and say, Home Depot says, man, if you buy your electrical fixtures or your lighting fixtures on this, I can give you, no interest for 12 months, and you're so tempted, but please make sure that you remember no new debt through the course of construction. It's really important. So at this point, if you've done the 2-time close, we are ready. We'll convert it over. We'll close you on your second closing. Again, we'll give you that 0.5% credit from your construction loan. We'll give you 0.5% credit back on your long-term loan to help cover those costs. And you're closed up on your long-term loan and you're ready to go. There are a few questions that I'm going to address. Let's see. Does the owner sign off on the draws? Mike, that is a great question. Thank you. You have the option to choose either. You can choose to sign off on each draw, or you can choose to go ahead and have the builder have that responsibility and that authority to sign off on each of the draws without having to see. We encourage our homeowners to stay involved with that and encourage them to sign off on the draws. Sometimes it gets a little tricky because you're coordinating schedules with a builder and a homeowner, and then trying to get the information from subcontractors and suppliers and getting those into us. But we do give you that option. You can choose either way. That's a really good question. Thanks, Mike. Another question. Does the work need to be completed before the builder can request the draw to be paid? Yes. Ashvin, thank you. That is has to be completed. We will do an inspection on the property. Sorry, I'm going to grab a drink. We will do an inspection each time we receive a draw. So the process of builder gets together a draw, lists a whole bunch of subcontractors or suppliers that need to be paid, brings it into us and submits it. What happens at that point is we will send out an inspector to make sure that all of the things that are on that draw have been completed. Now I say that, and Ashlyn, there's only one condition that we would do away from that. We will do deposits. So initial deposits for suppliers. So for instance, typically the lumber, in order to purchase the lumber or in order to order the lumber package, they require a deposit. We will cover that. That's totally fine. Typically when you order your cabinetry, some of the bigger suppliers, I guess I'm not going to go individually, but some of the bigger suppliers require an upfront deposit in order to order the supplies. And we're willing to go ahead and front those deposits. So those are the only situation where we would front that where it hadn't been completed on the home. I hope, Ashlyn, I hope that that answers that question for you. There's another question from Brandy. What costs can you include in the construction loan? Example, permits, appliances. You know what? That is a great question too, Brandy. All of those, whatever is going into the property are costs. And so your appliances are a cost. And there are certain appliances that are standard in a home. The only thing that really isn't is a fridge that kind of comes and goes. Sometimes you can buy a home that includes the fridge and sometimes it doesn't. Fridge is looked at as personal property, but that even is a part of the appliance package in a construction loan. And so I would encourage you to include those. And permits, absolutely. That's a part of the overall cost of building a home, are the cost of the permits. And so when you work with your builder and you sit down and you go through a cost breakdown is going to have every one of those categories and a line item for those costs. And we want to make sure, and included in the cost of construction, just so that you know, are the loan costs. The loan costs are another cost that are part of the cost to build the home. And so you want to make sure that you've got a line item for that. That brings up one of the things that we do require. We do require that you have a contingency line item. And a contingency would be, we require 5%. So whatever the purchase price comes out to, or whatever the cost comes out to, we require 5% to be set aside as a contingency line item. What that would be is, in case of an emergency, in case something comes in and it totally, you know, you were expecting it to be 5,000 and it was 8,000, and you don't know where that 3,000 is going to come from. We set that up as a contingency for an emergency set of funds. So that's a really good question, Brandy, and thank you for pointing that out. Another question: how does this? Let's see. How does this involve the purchase of the land? For example, the various pieces of land we are looking at vary from, land can vary from, thank you, Alan, you're right. Land can vary anywhere from $100,000 to $500,000. You bring up a very good question. On land, when you have a piece of property that you're looking at, you have a couple of options. If the seller wants to close right away, which most right now in the market, who doesn't? But if they want to close right away, we do offer lot loans. On a lot loan, you do have to have 30% down, and we'll finance the balance of it. It's on a 15-year amortization, but it has a 2-year call. Really, our lot loans are meant to be just to help you get through and finish up your plans and permits and ready to build. So we do a 15-year term with a 2-year call on it. Again, 30% down. And if you have more questions on that, I'm just going to encourage you to reach out to us. But what we can do on that is we can do a lot loan, but if they'll wait for you to have your plans and permits ready, then we can close, and the first draw would be to pay the balance of that land. So let me just give you an example, Alan, so that I cover that question fully. if you have a piece of property, let's just say your piece of property is $150,000 and you're going to be building a home that's going to cost you $450,000. That's $600,000. We would require you to have about a 20% investment into it. In some cases, less than that. Some cases you can go up to 95%. But for this scenario, let's just figure 20%. 20% is only $120,000. So you don't have to cover the full cost of the land. So in this case, the first draw would go off to pay the balance of that land, and your investment would cover the difference, and we would start the construction and pay. So yes, the answer is we can either pay it through the construction loan, or we can do a lot loan and pay that lot loan off when we start the construction. I know that's a little bit confusing, but Alan, hopefully that gives you some perspective on things. So we have more questions. I love this. Can you include impact fees for utilities? Absolutely, yes. Again, Mike, that's a great question. That's a cost of the construction. You just need to make sure that you include those in the overall cost and cost breakdown. So when you sit down with your builder, make sure that you're putting those impact fees in there and those expenses in there. Sometimes you've got impact fees, sometimes you've got, you know, gas that's to your neighbors and you need to pull it closer and you've got additional fees. All of those fees, any of those costs that are involved are looked at as cost of construction, and we need to make sure that we represent those. Likewise, if you pay for things outside of construction, let us make sure and see those. We want to make sure and give you credit for everything that you've paid so that you have full credit of all of the money and investment in the transaction. So if you've paid for your plans, put them in the cost and let's show that you've paid them so that you get the benefit of that. Hopefully that gives you some perspective on that, Mike, and that's helpful. So next question, I have a commercial property question. Can I build my house in the second floor? You know what, Levin, that's a really good question. And the answer for residential is we cannot do those types of financing, but the good news is our commercial department can. You are more than welcome to reach out to that main line, that 801-481-8840. Tell them that you need to talk to a commercial officer and we'll go ahead and get you referred over. That's a great question, and that's happening more often where in commercial buildings, they're putting a home, a residence on the secondary floor, but we just haven't been able to secure financing on a regular conventional type loan on that. So sorry, but that's a really great question. Thank you for that. Another question. Is the contingency required on every construction loan regardless of the loan amount? It is, yes, Ashlyn, it is. That's a good question too. We require that as a safety net. We want to make sure, it's been our experience that construction loans have a tendency to go over more times than not. So I've been doing construction loans for about a long time, 30 plus years. And in 30 plus years, I think I really have only seen maybe 2 or 3, and I've done a lot of construction financing that have actually come in strictly on budget. It's just typically something that people go over. You know, they set aside $4,000 for appliances and they go in and find a fridge that's $3,000 of that $4,000 and go, oh yeah, but I have to have this fridge. And they go over. And so we've found that it's just a safety net that is very helpful in the long run for our members to have that 5% contingency as a backup. So we do require that regardless of the loan amount, regardless of the situation. That's a good question though. Thanks, Ashlyn. More specifically, it sounds like there will be a long period of time just getting plans and everything set up before actually getting loan. I'm worried that someone else might purchase the land. It's good. That's a good point, Alan. That's why we offer lot loans. So the question is that there is a time frame that it takes to gather plans and specs and getting the cost breakdown and finding a builder. You know, there's a lot of time that goes into that. And you don't want to lose out on that land. If you found a piece of property that you really, really like and that really you want to just move forward with, talk to us about a lot loan because it will secure that land. You'll have it secured so that you can go ahead and work through that process of finding a builder and getting a set of plans and doing all of that. So that's a really good point too. Is there a certain percentage that needs to be put down on the loan at closing time? Yes, that's a really good question, Brandy. We will finance up to 95% of cost or value whichever is most limiting. So 5% down plus you have to pay your closing costs. So 5% down of whatever cost or value is most limiting, and then additional costs, the closing costs. So your origination fee, your inspection fee, your appraisal credit. And we can go through, I typically don't go into detail on closing costs on this. We would be happy to talk to you about specifics and details on closing costs. Just give us a call again, that 801-481-8840. You can talk to any of the mortgage consultants, tell them that you watched the mortgage webinar and that you have questions on the fees, and they'll go through that with you. So that's great, thank you. Let's see, more questions. When it comes to the construction contract, are there any restrictions like cost plus or on an estimate? Okay, you know what? That's a really good question. So the question is, when you do a cost breakdown and you have a relationship or a contract with a builder, is there a difference or a preference on cost plus or an estimate? A lot of the builders base their contracts on a cost plus or an estimate. Those are the two options. An estimate is, hey, I'm estimating that your foundation is going to cost you about $18,000. And when the foundation is poured and they get the bill is $16,000, and you're going, woohoo, we've got $2,000 to put somewhere else. But if the estimate comes in, they're estimating $18,000 and the actual bill comes in at $20,000, you have to cover the extra $2,000. We prefer to have a fixed cost contract so that there aren't those variables in the market, and most general contractors will offer that, because what they do is you might pay a little bit more than what the actual cost is, but it's because of their relationship, because they have a better relationship, and the subcontractor is giving them a break for using them on a regular basis, building that relationship. And so to have a cost plus is difficult. You typically get an estimate from a builder and they say, we're going to build this home for $500,000, and they stick to that. If they get any breaks from the suppliers and the subcontractors, it's because of their relationship, and they will still build it for the $500,000. If it costs more than that, they typically will absorb that cost if they've given you a fixed price contract. So that's something to really go into with your general contractor and to really identify. Some of them will give you line item budgets. They'll say, we're going to give you for your appliances, here's $5,000, spend it how you will. If you go over, then it's on you. If you go under, then you can have that extra for somewhere else. Some of them will do a line item like that for certain things, flooring, light fixtures, appliances, those types of things. So, and we can go into more questions. We can go into more answers on that one. That's a really good question though, Ashlyn. Thank you so much. I would have missed that. Thank you. Another question, do you offer resources to get started with building a home? What is needed with the city? How to find a general contractor? You know what? Yes, Brandy, come and talk to us. We do have a list of builders that we have worked with in the past, and we can help you, kind of give you an idea of where to get started and how to get started. The best thing is what you're doing. You're learning about what to expect. You're understanding the process and what you're going to be going through, and you're asking questions. And those are really the biggest things that I would encourage is, you know what, if you don't know, don't feel bad about it. Ask questions. There's no stupid question. So just make sure that you ask, and we would be happy to work with you and help you get started. So another question, I know you mentioned that you won't be going into the closing costs that are there, but is there a fee for the construction loans? Yes, there is. So Ashlyn, the reason I don't get into details is because every scenario is different, but I'm happy to tell you on our construction loans, the one-time close and the two-time close have different set of fees. The two-time close has its own unique, because you're closing two different times. You're closing on the construction loan, then on the long-term loan. We do charge an origination fee on both of the loans. They're different amounts, and it depends on the term of the loan. That's why I said I'm not going to go into details, but yes, there are fees on the construction loans, and you've got title fees, and you've got the appraisal fee, you've got insurance. the homeowner's insurance, the course of construction policy to cover you through the course of construction to make sure that if anybody has any accidents on your property that you're covered. That's what a course of construction. It's similar to having a homeowner's insurance on your home that you live in now. That same homeowner's insurance, you can write what's called a course of construction policy that covers you if somebody, like I said, if somebody comes onto your property and gets hurt, as a backup to the builder's policy. So there are a lot of variables that go into it, and that's why we really don't get into the specifics here. So, but thank you, Ashlyn. Reach out to us and we'll go through and give you an estimate on what you're looking at. Another question, are there any differences in construction loans for modular or prefab homes? You know what, Donald, thank you. I appreciate that question, and the answer is yes, and the answer is we don't offer we don't offer construction financing for modular or prefab homes. We have found that we just cannot get a comfort level for those products right now, and there are a lot of variables in moving them, and typically we just don't work with that type of, and we've had a hard time finding builders as well that work with those types of products. So as it stands right now, we don't offer construction loans on modular or prefab homes. But that's a really good question. Thanks, Donald, for asking. You guys have asked some really great questions, and I'm sure that there are a lot of questions that are going to come up. Just a couple of reminders and do's and don'ts through the process. You know, we've gone through and we've talked about a lot of different things. So I'm just going to do kind of a reminder. Do make sure that you check with your mortgage consultant before making any changes. Before you do anything to the home, if you've decided that you're walking the property and you've decided that, you know, listen, I really wanted to have an extra closet here, those are minor. But if you want to change walls, or if you're going to change finishes, or if you're going to not finish what you anticipated that you originally were, please keep in touch with us. Make sure that you communicate. I say this all the time, communicate, communicate, communicate. Just make sure that you touch base with us and keep us posted. And also keep in touch with your builder during the construction process. I can't imagine going through building a home and not being out there all the time and checking in with the builder on a regular basis, but some people just don't feel that way. So I would encourage you, keep in touch with your builder through the construction process. Be out there on a regular basis. This is your home, check in, make sure it's being built the way that you want it to be. And then lastly, again, come back to your mortgage consultant. Check with us, ask us questions, make sure if you have anything that you have a question on, there's no off-limit questions, and no question is stupid. We want to make sure and answer that. And the don'ts. Again, I said before, don't start construction before funding occurs on your construction loan. I can't emphasize that enough. I can say that over and over and over, and we still will have people that will go out and dig on their land. Don't start construction. Don't do anything on the property. Don't even dig with your shovel on the property. And don't incur any new debt or increase your current debt during construction. Now, I'm going to add a caveat to that. I know that when you're building, there are always opportunities that come up. Can I throw this on a credit card? I'll pay it off. Can I throw this on this? If you would just please check in with us and just make sure to communicate, hey, I really need to go ahead and get this new credit card. Is it going to affect my ability to qualify at the end? If you'll just simply talk to us, we can prevent any oopses at the end. So just make sure that you check in with us. And don't change your income. Now, this is not to say that we haven't had borrowers that have changed jobs during the middle, but if you're changing jobs to increase your ability for income or increase your position and you're staying in the same type of industry, we might tell you it's okay. But if you come to us and say, I'm going to quit my job, I just feel like I can't take it anymore and I'm going to look for something else, please don't change your income. It will affect your ability to qualify on the long term, and we really want to see you go through this process and have a good experience and be in your home at the end. And lastly, don't deviate from the plans and costs that were submitted for approval. Don't all of a sudden decide that you're going to spend an additional X amount of dollars without checking with us. And don't all of a sudden change and say, we decided that we don't have enough to finish this basement, even though we told you that we did, now we don't. On the cost breakdown, we used it for something else. Please make sure that you're prepared to build it the way that you initially start out and see it through that process. There are going to be small changes throughout the process, and we understand that. And there are going to be small changes with finishes, and we understand that. But don't deviate and make significant changes from the initial plans. If you do have a need for that, contact us and we'll help you through it and walk you through that process. So there have been lots of questions, and you guys have been fantastic. Thank you so much. There have been great, great questions. We should save those questions because those have been fantastic if there was any way possible. But we just want to say thank you again. My name again is Jennifer Young, and I'm the sales manager over the team here at University Credit Union. And we love construction loans. I'm just going to throw that out there. This is one of our favorite things to do, is the construction loans. We really enjoy working with you through the process. It is a complicated process and there are a lot of things that go on. But if you have questions, that's what we're here for. We're here to help you kind of navigate this experience. Our goal in this is to have you go from start to finish, and when you move in, celebrate with you at the closing of the long-term loan and celebrate the fact that you're able to be in your dream home. So make sure that you ask us, make sure that you reach out to us, and thank you again so much for asking. We're just going to check really quick to see if there's any final questions. Give you just a few minutes for final questions. And then if you don't have any more questions, we'll let you go. But if you do, go ahead and type them in. But that's the end of our presentation. Again, reach out, the 801-481-8840. You can find information on our website. I know y'all know where we are because you're here at the webinar, and we really appreciate that. Okay, it doesn't look, we don't have really any more questions. So thank you so much, you guys. I appreciate it, your participation. I appreciate the questions. Have a great afternoon.